Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, June 25th, 2025. Hope you're having a fantastical day out there in the interwebs. It's kind of rainy here. It's been, we had a bad storm yesterday and got a little more rain today, keeping it cooler, which is nice. Because when the sun's just out and the temperature's in the high 80s, it gets hot in the house. So, not down here. It stays quite comfortable in my office. It's always 70 degrees-ish. Anyways, hope you're having a fantastical day out there. And the S&P crept higher, closing, and actually it finished flat, shy of record territory as Middle East tensions eased and the Fed kept its cautious tone. Powell signaled patience on rate cuts while markets leaned on tech strength to offset dips in real estate and utilities. Tesla stumbled on weak European sales. FedEx warned on profits, but NVIDIA and BlackBerry helped lift the mood. With GDP and inflation on deck, markets are holding their breath. So before we break all the news down, I need you. Yes, there, John or Mike or whoever you are. I need some help from you. Give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All righty. Well, let me see. Where are we? There it is. All right. I knew I'd find the button. All righty. Starting out with the markets. Dow Jones was down 0.25%, 106 points, closed at 42,986. S&P 500 flat at 0. It was down 0.02 points, so really at zero. Closed at 60.92. Let's see here. NASDAQ up 0.31%, 61 points, closed at 19,973. The VIX down 4.12% today. It's at 1676. Canada down 0.57. Brazil down 1.02, and Mexico up 0.33%. In Europe, Germany down 0.57, UK down 0.46, France down 0.76. Netherlands down 0.73, Spain down 1.59%, Italy down 0.39, Switzerland down 0.9, and Portugal down 0.77. Russian exchange is green today. MOEX up 1.55, RTSI up 1.8. And the overnight markets, the Nikkei in Japan was up 0.39, Australia up 0.04, New Zealand down 1/3. In China, the Shanghai up 1.04%, Shenzhen Component up 1.72, China A50 up 1.26, DJ Shanghai up 1.27, Hang Seng up 1.23, Taiwan weighted up 2.1. All right, good stuff. All righty, well, let's hop into the market recap. S&P 500 ekes out gain to remain near record highs. Actually, it didn't. The S&P 500 posted modest gains Wednesday, remaining near all-time highs as markets monitor geopolitical developments and fresh commentary from the Federal Reserve Chair Jerome Powell. Tensions in the Middle East appeared to ease following a ceasefire between Israel and Iran, brokered by Trump. The ceasefire came after a 12-day air conflict, which included U.S. airstrikes on Iranian nuclear sites over the weekend. Trump declared the strikes had, quote, completely destroyed, and that's in quotes, the facilities, although we're getting rumors that nothing actually happened. Though U.S. intelligence suggested Iran's underground nuclear infrastructure likely remains largely intact. Yeah. Mm-hmm. Secretary of State Marco Rubio, little hands, Marco, insisted. Oh, wait, that was Trump. That's little hands. Oh, he was just little Marco. That was it. Let's see. He said, Marco Rubio insisted Iran is now, quote, much further, quote, end quote, from developing a nuclear weapon, downplaying the intelligence assessments. Meanwhile, NATO leaders agreed to raise defense spending targets to 5% of GDP by 2035. So 10 years from now. A major policy win for Trump. I'm not sure how that's a win. Who has repeatedly pressured allies to increase military outlays. Well, here's a good solution, Mr. Trump. Why don't you leave the NATO pact, then that way we don't have to chip into any of that crap. It's not our problem anyways. In Washington, Fed Chair Jerome Powell continued his testimony on Capitol Hill, reiterating the Fed's cautious stance on rate cuts. Powell warned that while tariffs may cause only temporary bump in inflation, the Fed must be prepared for more persistent price increases. Trump again criticized Powell for resisting deeper rate cuts. Investor concerns over tariffs and inflation were reflected in Tuesday's sharp decline in consumer confidence, despite strong jobs numbers. In corporate news, General Mills warned of weak sales and income due to tariff-related headwinds, dragging its stock lower. FedEx and Paycheck also disappointed with weak forecast and earnings. Conversely, BlackBerry stock surged on stronger demand. for cybersecurity services, while NVIDIA hit a record high after Loop Capital raised its price target, citing continued AI chip demand. BP paired gains after Shell denied reports of acquisition talks. Markets await new home sales data for future economic or further economic signals. Right, good stuff. Let's jump to a data report here from First Trust May new home sales from Mr. Bryce Gill. Let's make that a little larger so you can see it. All right. Hey, can you read it? No. All righty. Let's get my notes up here. New home sales disappointed in May, falling 13.7% to a 7-month low, the largest monthly drop since 2022. The results came in weaker than any forecast from economists surveyed by Bloomberg. The sharp decline followed a surge. A surge in April, illustrating continued volatility in the housing market. The South accounted for most of May's drop in sales. At an annualized rate, 623,000 new homes were sold, a level roughly in line with pre-pandemic 2019 figures, but still well below the pandemic era highs. Well, I don't know if you could really count the pandemic era, because that was kind of a strange time where interest rates were at zero and people had a lot of extra cash in their pockets from stimulus, and they were refinancing and buying homes. And so where were we? Meanwhile, or wait. All right. Let's see here. Affordability continues to be the market's biggest obstacle, with the Fed recently pausing rate cuts. 30-year fixed rate mortgages remain near 7%. Meanwhile, median new home prices are down 7.3% from October 22 peak, but have risen 3% over the past year. Part of the price drop reflects a 5.6% decline in median square footage for new homes, but price per square foot has also fallen as developers offer incentives to move inventory. Completed new homes supply has surged over 280% from 2022 lows, providing more options and putting downward pressure on prices compared to the existing home market, which remains constrained by homeowners reluctant to give up low fixed rate mortgages. In other housing data, both the Case-Shiller and FHFA home price indices slipped 0.4% in April, but remain up 2.7% and 3.1% respectively year over year. On the monetary front, the M2 money supply rose 0.4% in May and is up 4.5% year over year, still below historic norms. Yeah, I don't know about that. Suggesting the Fed has room for modest rate cuts. They don't actually, in my opinion. Meanwhile, the Richmond Fed's manufacturing index ticked higher to -7 in June from -9 in May, signaling continued, though modest, weakness in factory activity. All right. And we got one more article here, and then we're done for the day. I know you're really excited with what is going to come next. This is from Zero Hedge, The Great Bond Scam, Wall Street's Biggest Myth Exposed, authored by Nick Giambruno via the International Man. All right. A long-held belief in financial markets is that U.S. Treasuries are risk-free assets. But according to Nick Giambruno of internationalman.com, that notion is dangerously outdated. For decades, investors, institutions, and governments have parked trillions in U.S. Treasuries, treating them as a safe store of value. The global bond market now exceeds $300 trillion, dwarfing the roughly $22 trillion in value of all gold ever mined. But Giambruno argues that bonds, especially treasuries, are poised to become a graveyard for capital. The fundamental problem is that treasuries are denominated in fiat currency, which is being debased at an accelerating pace as governments attempt to manage unsustainable debt. Historically, the U.S. money supply, M2, has grown at about 7% annually, and that rate is expected to rise. If after-tax revision or returns from treasuries don't exceed this debasement hurdle, investors are effectively losing purchasing power. Giambruno warns that holders of treasuries are increasingly likely to face negative real returns or even outright loss of capital. This could trigger a massive shift of wealth away from bonds into hard assets like gold, similar to the period after 1971 when the dollar was decoupled from gold, fueling a 24-fold increase in gold prices by 1980. In addition, to economic concerns, geopolitical risks are mounting. The U.S. has demonstrated a willingness to freeze or seize foreign assets, as seen with Russia's reserves, prompting nations like China to reconsider their exposure to treasuries. Giambruno predicts a historic gold bull market driven by a global trend towards remonetization of gold as the ultimate store of value. Investors, companies, and nations will increasingly seek refuge in gold as confidence in fiat currencies and debt-based assets erodes. There is not a lot there that I could argue with. Now, is gold going to be the only one? Probably not. We do have cryptocurrencies, there's silver, there's other assets such as land, property. There's lots of places you can park your money that have less risk than the equities market, the bond market, or even the treasury market. So, all righty. Well, that is everything that I had to ramble on about today. Was it exciting? Yes, I think so. All right. Well, if anyone needs anything from me and needs to get their financial crap together, where do you want to go? Doodle-doo-doo-doo, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a jingle. I'd love to help. All right. Well, that is everything that I had to cover for today. And again, go to the website if you need me. Otherwise, everyone out there have a terrific evening. I'm going to probably do some chores and some drywall work this afternoon or maybe tomorrow. I don't know. I'm kind of tired. And play with the doggies. And I went to Sam's and the grocery store yesterday. So I've got a ton of meat I have to separate, vacuum seal, label, put in the freezers. So yeah, fun stuff. Anyways, all right. Hope everyone out there has a great evening. And I'll talk to everyone again next time. Adios.